Beyond 19 webcast, a fireside chat about the investment world post-lockdown. I am Charlotte Thompson, part of the investment team at KTN, and at KTN we create diverse connections that enable positive change, and through our knowledge and expertise we enable innovators to transform those bright ideas into real-world solutions. I'm joined by my colleague, Alan Cowie, who's the KTN's Network Communications Manager, and Alan will be moderating the questions and comments coming through from the chat function. So please do submit any questions you might have, and we plan to ask the panel a few later on in the session. So I'd like to introduce our panel. We have Nigel Walker, Head of Innovation Lending and in Investment Partnerships at Innovate UK. Nigel has a background in financial services as a chartered accountant and having worked at Deutsche Bank and GE Capital. We are also joined by Jane Theaker, CEO of Kinomica. Jane has implemented numerous genomic technologies to support drug discovery and developed several FDA-approved companion diagnostic tests. Jane has previously raised investment and is currently raising investment, so I'm really interested to hear Jane's story. And we are also joined by Roderick, Managing Director at UK Business Angels Association. And Rod's career spans over 15 years of managing, founding and growing angel groups and investment platforms, having achieved raising over 100 million of equity investment for 500 startup and scale-up businesses. So COVID-19 has led to a worldwide pause and a cultural change, not only for business, but also for the investment community. And with investment raising previously being so reliant on who you know and building those relationships, I'd really like to start by asking Rod whether you feel that online relationship building can ever really be a substitute for that little black book.
Yeah, thanks, Charlotte. I think what is a black book in the first place? I mean, it's your own personal relationship and network that you've built up over many, many years. Many moons of doing a lot of work across different industries. It's a really important part, and I don't think personally that online investment, kind of online relationship building, can ever replace the black book, but it can help support it. During times like this, it's good opportunity to keep in touch with those you haven't spoken to in a while. I do think as well you can start to build relationships and conversations with people who may well end up in your black book in time. But I don't think you can ever really replace it, because what it comes down to is building good, meaningful relationships, and they take years and quite a lot of face time as well, frankly.
Yeah, really interesting. And Jane, does that tie with your experience?
Well, I would say that I see the online experience as being just an extension of the black book. It's another tool that you're adding to your repertoire. So as Rod explained, it's about building those relationships over time, and having an online relationship, can be just as valuable. And quite often it can be facilitated by existing contacts that you have. So when I've been trying to raise money, I might not have a particular contact at the investor location that I'm interacting with, but I would go to my little black book and say, do you know anybody here that you can introduce me to? And that then allows me to make the online connection a lot easier, because you've got that in then. So I see it as an extension, and it's been quite enabling, I've found. Being in the northwest of England, sometimes it can be quite challenging to get those interactions because they're maybe based down south, and it's quite enlightening to be able to do those online investment conversations just using the online interaction, rather than having to go down to London or go down to the southeast to have those interactions. So it sort of levels the playing field a little bit, I find.
Great. And Nigel, how do you think your relationship has changed with working with investors now online?
I would agree with what Rod and Jane have said. I think the key is one has to make an effort. It's relatively easier if one bumps into someone over a cup of coffee at an event to mention something in conversation that can then lead to, oh, well, I know someone at that particular investment house, therefore I can make that connection. and that one can do that without too much effort. When it's in an online context, I think, as Jane has said, it's about using those connections, but one has to make a specific effort to, and perhaps be more explicit about it, saying, I'm looking for this, I know you know that person, therefore can you help to make that connection, rather than sort of allowing it to come through as it might in a different face-to-face environment over, as I say, over a coffee at an event or something.
I think from an investor perspective as well, I just wanted to add in, it's very rare that, value add good investors are going to make an investment in a business having only ever seen them or had relationships with them online. They are going to want to meet them in person, see them in the flesh, look them in the eye. That kind of thing is quite important in our industry. It's all about chemistry, which is a real challenge in this time. You will hear lots of great news story. Oh, we've closed 6 rounds since lockdown. We've invested in 18 businesses. I've written out 80 checks since it all locked down. But every single one of those checks were written to a company they had met prior to lockdown. Not a single one of them have been made and kind of came across them during this time. Most of the majority of investors, unless they already have an established relationship there, are going to be waiting until things loosen up a little bit where they can start to meet people.
Yeah, I've heard from the conversations that we've had with investors that whereas perhaps in the digital world, it's possible to consider an investment without having actually met the team in person. When it comes to considering an investment in a business that has, for example, a manufacturing or a production facility, or maybe a lab in the health and life science world, that is going to be more difficult.
Yeah, for sure. And I think also,
quite like to
more passive investors are more likely to invest, and kind of lower amount investors are happy to deploy, as they do through crowdfunding platforms, without meeting a team. They might ever engage with them over a Q&A on a chat function. But I think serious investors making serious investments into serious businesses, I think that's going to be certainly challenged at this time.
As well, you do tend to, we're coming across one of the problems of online interactions. You tend to get that slight time delay that means that you cut across people and you didn't intend to cut across people.
You go for it.
Oh, thanks, Charlotte. So I was just going to say, it does mean that you have to be a little bit more creative about how you do your black book building. So quite often I've used LinkedIn to get an in with an investor, just reached out to them and connected, and maybe somebody more lowly in the company who you ping over your pitch, and then it sort of makes its way up in terms of the sort of internal process and consideration by the investment committee. But that just means that you have to be a little bit more creative about who you reach out to, because everybody's busy, and you want to make sure that whatever interaction that you have has the most value and is going to get you that foot in the door.
I like what you were saying earlier, Jane, about that leveling up of being able to raise investment. And I just wonder whether you feel like there could be potential for the democratization of the investment raising process.
I think that's absolutely I think it's essential, and I love the idea that somebody from another geographical location can reach out to somebody in Boston or on the west coast of America and make a really compelling pitch and potentially get investment. Now, yes, you'll need due diligence, yes, you'll need those face-to-face meetings, but at least you're getting that ability to interact with people that you would never have had that ability before. So I think in that, on that perspective, the online situation has actually created huge opportunity for businesses.
Especially UKBAA, you've done a huge amount for trying to reduce those regional disparities, work with founders who perhaps don't necessarily have the same representation, and so really opening up the black book for founders who don't have them. How do you feel like moving online might also democratize that investment process?
I think the moving online, I think the benefit of it is that awareness raising. It kind of removes the kind of geographical limitations that are often there. Physical event, pitching event happening in London, London investors, great. Putting it in Manchester, London investors are not going to travel in the main to Manchester to see those businesses. But with the online approach, often they don't know where they're based. They haven't got a clue where they're based before they're seeing them. And so they're seeing the founder for who they are and their technology and their business for what it is. Just on, I think yesterday we had 120 VC angel groups, all watching 10 fantastic women founders for Tech Invest, which was a great opportunity to kind of really raise awareness of some fantastic work happening. And we've also found, we've done a few things, like we've opened up our deal share platforms. We've said, hey, look, during COVID-19, if you've got a problem, if you're trying to raise funding, you can add on our deal share platform completely free. We're going to open up to investors to really help kind of reduce those major geographical barriers, which I think are a big issue in the UK personally. So I think it does make a big difference. And I think as Jane has referenced, there may well be follow-up face-to-face discussions, due diligence, more detailed meetings. But if with the online basis, they have a great chance to at least captivate their audience, regardless of where they are or where they're coming from.
Exactly. Nigel, with the Innovate UK's Regional Angel Investment Programme as well, there's already been a lot of work that's done previously. Will this kind of new way of working support that?
Yes, so our Regional Angel Investment Accelerator Programme is about putting grant funding for research and development into a business at the same time as raising equity investment from selected investor partners. And we ran and we continue to run the Regional Angel Investment Accelerator because we want to do our best to ensure that investment isn't just concentrated in London, the Southeast, or in the Golden Triangle, because we focus particularly on research-intensive businesses. And there has certainly been success in doing that. It's reliant upon the angel group, the manager of that group, to make sure that they're exploiting the opportunities in today's environment in the way that, in a different way from how they would have done it 6 months or a year ago. So as Rod says, having things like online pitching events instead of it being in a boring meeting room, we can all be at home and listen, and hopefully there's perhaps a bit more focus when people are pitching effectively straight to camera. There's an opportunity to be almost more direct, and for the people in the audience to hopefully to concentrate a bit more on what they're listening, rather than looking around a hotel meeting room, which
more intimate, isn't it? Really,
too much.
Yeah, it's more intimate, I think, when you have that camera view, because you're one-to-one. Literally, you might be one-to-many, but actually it's a one-to-one, just many times, which I think is really interesting. There is also a bit of work to be done on the ground level, because our research with the BBB showed that something like 69-70% of investors are investing within their own home region. So there is still that kind of mental kind of like, I want to invest closer to home so I can kind of be near it, which needs to be a little bit, I think, a bit of work on that too. But also, on the flip side, need to be working within those regions to build and grow the kind of local angel ecosystem there as well. So
BBB, British Business Bank, who also have their regional angel programme, and we've seen a few of those launch even through the COVID lockdown as well.
Yeah, what's interesting as well, Charlotte, is and I participated in BioSeed and BioTrinity. BioSeed I did face-to-face. BioTrinity I did via an online portal, and what was really great was it forced me to do a little video that could then be played back on the BioTrinity website. Well, that was brilliant for pitching, because I could just refer to that link online whenever I was interacting with a new investor and say, here, go and see my pitch. It meant I didn't actually have to do the pitch in person. They could just watch the pitch at their own leisure and then come back to me if they were interested in following up. So, the ability to have that little video that you can just refer people to, that online pitch that is kind of pitch perfect and you've got it absolutely honed, that was really useful to me, going out and interacting with investors.
I think that highlights the need for preparation, and whatever the environment, however one's presenting or pitching, that preparation is necessary. But one thing I've noticed, so within the innovation loans that Innovate UK offers, the final stage in our process is to have a presentation from the management team to our credit committee. And up to now, we've always gone and visited the company, done the presentation in their offices, and we've migrated that to doing it over video conferences, and it's been some of the things that come across well or come across not so well can be highlighted. So we had one presentation, for example, where the chief executive wasn't able to get their video working, so they were just on the telephone, and that really brought down the quality of the interaction. We could see the face of the chief technology officer and the CFO, but the CEO wasn't there. We couldn't see that person's expression. You can't see the interaction between a team in the way that you can perhaps in a normal meeting. So that preparation, making sure that, you know, whether it's having prepared a really high quality video or absolutely nailing your elevator pitch, knowing exactly what you want to say, having it choreographed between a team. So when the CEO is going to say this, when the CFO is going to say that, when the commercial person comes in and starts talking about the forecast assumptions for their sales growth and how plausible they are, that needs to be choreographed, that needs to be prepared. And just as in any environment, preparing to present is absolutely crucial. It's one of the features of the UK market, perhaps compared with the US market, that traditionally in the UK we're a bit rubbish at doing presentations. Certainly not as full on and as glamorous and glitzy perhaps as some of the slightly overdone US presentations that I've seen. But that preparation is absolutely essential, and presenters need to prepare in a slightly different way for it being in an online context rather than face to face.
Nigel, I'm a massive advocate. Preparation is key, and
well, that's because you help lots of people to prepare and present.
True.
One thing I've seen around the preparation piece, actually, you can kind of get away with a little bit less preparation online, purely because you can read off the screen and no one can tell. I mean, I could be browsing Facebook right now and you guys would have no idea because it's just below my camera.
I really hope not.
No. But we had a few. I mean, we heard quite a bit of paper rustling on our presentations yesterday. So they were kind of reading, but you can't quite tell because they're positioning their papers just beneath it. So there's a little bit you can kind of get away with a bit more actually, potentially.
I was on again another management presentation from one of our innovation loans companies, and afterwards we got a compliment that our questions were really insightful. We're just looking at the company's website while we're on the thing and thinking, oh, I hadn't asked about that. That was an unprepared question. I'd better ask about that one. Which would be, you're right, Rod, it would be much more visible if you're in a meeting room. Or else I would think, oh, there's Nigel looking at his emails again and not concentrating.
Here I have to give a big shout out to Charlotte. So she actually helped us to do our investment pitch. So she did a fantastic job, and that was probably key to why we've done so well in the investment round. So KTN were absolutely brilliant. I can't fault you, Charlotte. You were fantastic.
It was very awkward having to pivot from delivering in person to online halfway through that health investment program we did with Innovate UK and the National Institute for Health and Research. I just want to kind of moving beyond that, preparing for investment pitches. How else can companies respond to help them attract funders and investors at the moment? Jane, from your experience, how could companies pivot, adapt in this current environment?
Yeah, so we had to pivot a little bit because unfortunately halfway through the COVID crisis, our labs and our access to our mass spectrometers fell through because the university we were working with had to basically lock down operations, and that meant that we had to look at, well, what can we do here in the interim? That meant we were looking at, okay, can we analyze companies' data? We can do that from home. We can take on board some of these phosphoproteomic data sets. So that's exactly what we did. We pivoted and we advertised, and that meant that there was a good revenue stream coming in, and it meant that the commercialization was still ongoing. And then of course that looks lovely when you're presenting to an investor and saying, it's not just the wet lab work we do, it's mainly the phosphoproteomics and the bioinformatics we're doing here, and we can do that from home, and we've managed to continue our revenue stream here. So that really looks like you've obviously pivoted and you've been able to adapt to challenging circumstances, and that's what we did. So that's just one story. I know that a lot of people have said, okay, well, we normally do X, but during COVID, we're going to pivot to something more involved with COVID, because from a life sciences perspective, that's something we can do. And if you're doing COVID work, that means that you get that sort of special protected status. You can keep your labs open, you can keep your operations running. So that's another way that you can sort of pivot to ensure that you're bringing in revenue and continuing commercialization. But you have to be quite fleet of foot. You have to be able to move quickly to be able to take those opportunities on board. So that's a couple of thoughts, really.
And Nigel, you've had to work incredibly hard with your innovation loans portfolio. How have they adapted, or what lessons have been from their journeys to attract funders and investors?
So within our innovation loans portfolio, I'm really similar to everybody else there in terms of attracting investors where they need it. It's been a case of recognizing that closing a round is going to take a little bit longer, and broadening out the range of people that they're talking to. One thing we've seen within our innovation loans portfolio, it's reasonably broadly spread across the country and across sectors and industries. We've seen some companies, so we have one company that we're lending to that is involved in using AI to develop clinical trials, working with customers. They have been absolutely swamped with very specific requests for work, and therefore they've been generating revenue very, very well. We've seen others, so a company that manufactures 3D printers, where their revenue stream from selling 3D printers has been lower than it would have been otherwise, because people aren't making those buying decisions. They don't have their factory open and need a 3D printer to operate their factory. So their customer base, their revenue, like many other companies across the country and across the world, their revenue stream has dipped. But they pivoted insofar as they've been using their 3D printers to manufacture a PPE. So instead of selling 3D printers, they're continuing to manufacture their 3D printers and using them themselves in order to meet a real need, generate some revenue, not as much as they would do otherwise, but maintaining the connections. And they've been working hard to publicize that activity. And we've got another company in the portfolio, that a company called QuickScreen, that manufactures flexible screens. Their challenge has become not just about improving their production process, but doing that at significantly higher scale than they thought was going to be, than it was before. Innovate UK have funding available at the moment. We've provided funding for continuity grants to help people with ongoing projects to continue and complete their projects. We're also offering continuity loans where the amounts involved are higher, between £250,000 and £1.6 million. So that particular company, I hope, will apply for one of those loans, that we will also be able to, assuming it gets through the credit committee, that we will be able to consider making a loan to them. And that's a company, as with others, that have been making use of those connections that we've talked about earlier, in terms of understanding that they need capital of different sorts, including equity investment. They've asked us for help in terms of making connections with potential investors as they're having to scale and grow quickly, which we've been very pleased to do. And I suppose in our portfolio as well, we've got some companies who are finding it to be very, 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 very challenging. People with supply chains that did involve Chinese companies, for example. There was real disruption from several months ago in those supply chains of making products or components. That's become more difficult, so they've had to look at restructuring their supply chain, looking at local manufacturing, looking at diversification of that, all the sorts of challenges that real businesses have in this very difficult environment that I'm sure Jane is living and much more aware of than I am.
And Rod, how about yourself? How are your investor members supporting their companies to respond?
Yeah, I mean, it's obviously a very challenging time because I think we have seen a fundamental reduction in the amount of capital that investors are prepared to deploy in early stages. When markets and everything takes a hit, high net worth individuals, one of the first things that get sacrificed is their kind of high risk kind of play money, which is normally reserved for this early stage piece. So there is going to be and has been a reduction in investment, but having said that, they still have portfolio companies that they need to help see through this difficult time. So they've been doing a number of things. Big thing number one is a major triage process around your portfolio. Who's at risk? Who's less at risk? Who has the lowest runway, shortest runway? Who has a big opportunity from this, and who has a big threat from this pandemic? And then actually wrapping themselves around those at a higher risk category, and helping them to access the government loan schemes that Nigel's mentioned as well, and other support schemes too, not just equity, but also deploying equity where they can relatively quickly to help give that company the runway needed to get them through. Because although investment has almost certainly reduced now, it will probably have a bit of a tail effect. Valuations are going to be lower, capital is going to be more expensive moving forward, and so this could well have an impact for 12 months, if not more so, from now. And so they've been really kind of rallying behind those businesses where they can, and obviously, utilising whatever they can to support them. And whether that's furloughing, whether that's having to make some pretty strong, hard decisions in their portfolio, then that's what they've been doing. It's important that those companies survives and then goes on to thrive.
Rod, you just mentioned a couple of the schemes that have been announced in recent weeks. Jane, have you utilised any of those yet?
We haven't at this point, and the reason I suppose is I went online and looked at the Future Fund, I think it is, and it gets. I think it's a good source of capital if you can afford it, but if you've got cheaper forms of capital, then you'd be better off taking those cheaper forms. So we've tried to basically prioritise that as kind of our plan B. And then we're going to go over after the sort of the cheaper forms of capital for us, which is that sort of equity investment that we would do as a first priority. But it could be that we do actually access the Future Fund. But I think we're at the moment hedging our bets more towards, we've got a very compelling pitch, we've got a very compelling investment proposition, and we feel that we've got better value out there in the marketplace rather than calling on the government loans at the moment.
I think it's fair to say that it's been amazing how quickly some of these new funding finance schemes have come out, and they haven't necessarily been quite ideal, but just like the innovation companies we work with, we've seen so much innovation also in the processes and systems behind the different funding and finance mechanisms in response to COVID. And I just wondered, Nigel, what's perhaps some of these positive changes that we have seen in the funding landscape you could see implemented in the long run? What have we learned that we could adopt in the future?
From an Innovate UK point of view, one of the things that we did back in April was to put out a call for applications for funding for grants for projects that were specifically focused on responses globally to the COVID-19 pandemic. And we looked at our standard process, and a lot of people within Innovate UK, within the team, worked at cutting that to make it as simple as possible. So instead of having our standard 10 questions, we cut it down to 4 essential questions. Instead of the competition being open for 2 months, it was open for a few weeks. We put in place a mechanism so that for those businesses that are successful in getting funding for their projects, we said it needs to be a quick project. So project length can be no more than 6 months, and it has to start before the end of June. And the maximum amount of funding is £50,000 because this is a specific response for quick, fast start projects. We looked at our assessment process, we looked at our and accelerated that. We had 8,500 applications in that particular competition, which is absolutely the highest we've ever had. We used our pool of assessors, we used colleagues in the knowledge transfer network, we had individual members of staff. Even I ended up assessing things which was an interesting exercise in order to process that volume of transactions. And we've been able to double the amount of funding that was available. So we're funding 800 projects, which is, I think, is fantastic. 800 different ideas across the entirety of the economy, from health and life sciences, but all the way through to the creative arts, through to funding a farmers market in Scotland I saw a video about recently. Those projects are going to be getting started. The money, the £40 million that we've been able to commit to that particular competition should all be in the hands of those project companies by the end of this month. So we worked very hard on a fast start competition with a fast process. We moved people around internally to be able to manage the process in that. And we hope that coming up soon with the additional funding that's been made available from government for Innovate UK, we've used some of that around continuity, so keeping existing projects moving so that they will complete, continue and complete, because R&D often gets a hit in a recession, and we think that R&D is absolutely essential to the future economic growth. So we want to keep those projects moving, and I hope that shortly we'll be able to announce some additional competitions. They may be slightly larger amounts of money, may take a little bit longer to be open so that people can put together a good proposal. But a lot of the learnings that we've had about how to make our process work more quickly, how to accelerate getting funding into the hands of project participants. In the Fast Start competition, it was 100% upfront payment of the £50,000 grant. With our next competition, it may not be 100% upfront, but we're working to accelerate payments because that helps the cash flow of those businesses, which helps those projects to happen, so that in the particular area of research and development and innovation that Innovate UK is focused on, that's our way on behalf of government as part of UK research and innovation to help R&D to continue, because that's going to drive growth in the future. Sorry, I threw in a sales pitch as well.
No, it's great.
You guys, I mean, as a kind of an external observer, I think Innovate UK have actually done some amazing responses to that, and the work that you've taken on in such a short period is mind blowing. And I think I think you guys have done an amazing job actually. I think there's also good opportunity for the fintech industry there in the mass digitalization of the deployment of capital as well. So I'm interviewing Chris Adelsbach, who's a well-known fintech investor, about some of his companies who have been kind of really thriving in this industry as well, in this situation, to help, because the government BBB have deployed a huge amount of money in a very short period of time to respond to it, and that is no easy feat, I have to say.
It relies on information as well. So within our innovation loans team and across Innovate UK more broadly, we need to make sure that if we're providing funding to a company, that company exists, that it isn't, that the directors haven't been struck off for whatever reason. So getting that information, working with financial information providers like Judil, we work in the innovation loan side with Moody's Analytics. They've been really responsive in helping us to get access to the information that we need. So yes, that use of data in today's fintech world, that's been possible. 10 years ago, that would have been so much harder.
Really challenging.
Jane, what of these funding mechanisms, what would you like to see in the future to kind of support your growth?
Gosh, that's really hard, because I can't see at the moment there are really any specific gaps. I think we've got a really good broad landscape here. I think obviously there's something around the regional development programs that the sort of European Union, that we're going to have to kind of bridge that gap a little bit. And government's got a mandate to make sure there's that evening up in terms of the regional development. So I think that's the only gap I can see that's sort of on the horizon, but I can't see any other gaps that aren't being plugged either by the investment community or by the government.
It's a good point. We actually had a pre-submitted question which was about that actually smaller pockets of funding that were mostly being delivered via local agencies on business support. just up to sort of 75k really, and not necessarily knowing yet what that might look like.
Yeah, exactly. I think that's the only gap that I can see sort of on the horizon, but it's not a gap just yet.
Mm. We also had quite a lot of questions that came through beforehand on what we think the investment trends might be, kind of post lockdown. I don't know whether perhaps, Rod, can you start to see certain trends emerging where we might see focus?
Yeah, I think there's also, there's, where there is strife, there is opportunity. And I think some, angel investors are entrepreneurial by nature, and as a result are naturally opportunistic. And we'll see some areas, which could see some really interesting growth. And we've seen some really interesting businesses actually significantly increase their revenue, increase their growth during this period. Things around edutech, around, healthcare as well. And it's also given a bit more momentum behind the digitization of previously potentially quite archaic systems and processes as well. So, tech will really come into its own, because without it, you really can't make things happen and make things work. So I think we will see, a big focus around there as well, which is really interesting. I'm interviewing, in fact, tomorrow, a chap called Jeff from Theaker Ventures. They're a very large capital firm out in Southeast Asia, and they've been through it with SARS. And in fact, some of the biggest Chinese companies came out the back of that lockdown and pandemic, the opportunities that came from what happened. So it's some really interesting opportunities that will come out of this. And I think we've also spoken to a few groups and investors, and although there's been a reduction in investment taking place, and it has been, there's also been a slight uptick in those new coming in to see actually there might be some really interesting businesses here that we can kind of get involved in at this level to see what can happen moving forward. So there are some great opportunities that are coming forward. Anything that's digitalization and kind of making things work without the physical having to meet each other can really do well during this time, and hopefully they continue post lockdown as well.
I've been enjoying your UKBAA Friday sessions, and I'm signed up for tomorrow, so look forwed to joining.
Great. Yeah, no, he's a great guy.
I would add to that, Charlotte, diagnostics. We've seen what's happened when you don't have kind of the testing in place, and I think if nothing else, it's really kind of heightened the level of, or the voice of, diagnostics in the whole healthcare system. So I think that's definitely a trend that's going to be carried forward.
I think that was interesting actually with our health investment program that you joined us on, is that actually the investors in the health sector weren't really necessarily as affected, perhaps because of the longer timeframes to market, and also because it was an opportunistic market to be investing in at the time. Yeah. And Nigel, on the investment partnership side, are there going to be some key areas that you're going to be focusing on?
So the investor partnerships that are about to happen, we've actually been working for a while as part of the Industrial Strategy Challenge Fund, looking at the challenge around the aging society, and that's developed into a healthy aging investment accelerator. We're working with 3 investors there. North Star Ventures, a classic VC with strong links up in the Northeast to Newcastle University and their expertise around research around aging and the economic consequences of an aging society, but also with Legal and General Ventures and with Barclays Ventures, 2 very large corporates who have a customer base that needs to have innovation brought to them, so that not only can people who are in older age help to manage their finances properly, but also so that the younger people can use technology so that when they reach an older age, they have financial inclusion and financial security. That helps those businesses strategically as a bank and as an insurance company in their business, as well as for their customer base. So those 3 investors are all keen to commit capital alongside our grant funding for R&D for earlier stage businesses. They're working with businesses that they already know and that we're introducing them to, and they will be working with us in the coming months to deliver some specific programs with grant funding and equity aligned. Another area that we're looking at, hopefully in the end of the summer, early autumn, looking at transforming food production, another of the Industrial Strategy Challenge Fund areas, Something else that is, acutely important for, I guess, the overall health and of the economy as well as of the nation. Food security is really important. And there was, I think, interesting about that particular program is that as part of the Industrial Strategy Challenge Fund, yes, there's funding into research centres, there's funding into collaborative research and development programs, there's perhaps funding for demonstrator programs, but they've recognised that bringing through new innovations is important. And there we're hoping to work with some corporate venturing investors and other classic VCs on later stage R&D and perhaps sort of Series A funding rather than seed funding. So we're working to develop that program at the moment. And the other area that's always going to be important is sustainability. Net zero is hugely important for the government, for us as a society, and therefore innovation that that addresses that challenge or challenges that are related to that, or standard or more open activities that have a sustainability angle to element to them, those I'm sure will continue to be important.
Thanks, Nigel. I'm kind of, I had so many pre-submitted questions as part of this, but also conscious that we've probably had quite a few questions through on the chat as we've been live. And so I'd just like to ask Alan what perhaps some of the main trends have been in the comments, or if there's any questions that you would like to ask the panel.
Thank you, Charlotte. Yeah, lots of really good questions coming in on the chat. So keep your comments and questions coming in. First of all, just on the first part of the discussion about working online, just a comment from Mark who says COVID-19 is challenging for us. For example, reshoring projects to the UK from Asia, where face-to-face and personal relationships are essential. Goes on to say that Black Book is more based on the Far East supply chain rather than UK. So thank you for that. And we've had lots of questions about funding. Does Innovate UK anticipate a change to its future grant funding and loan competitions as a result of COVID-19? I think you've already covered quite a bit of that already, Nigel. So let's go to Gurav, who asks a question. I think this is mainly aimed at Rod. Will investors prioritise COVID secure or COVID proof businesses more, so the businesses that can continue during any future lockdowns? Will investors prioritise those? Will they be a factor alongside other more traditional metrics?
Yes, and there absolutely there are now, and there absolutely will be moving forward as well. Because I think it is investors, they are there to make a return, and they want to invest in a business which has a as low a risk profile as possible. And so those that can kind of either take advantage of or certainly survive and weather another COVID storm and second peaks, etc., I think will absolutely feature in investors' thoughts. They're looking at things like extended longer runways, because raising is going to be harder, it's going to take longer, it's going to cost more to do it. So can the businesses actually kind of grow and achieve some decent growth metrics on lower investment as well, is another thing that investors are interested in to look at.
It kind of builds actually on one of the pre-submitted questions. Perhaps you could also just talk a bit more generally about what the key metrics are that you would look for in an investment opportunity.
Yeah, I mean, sure. I mean, there are many things to look in, but the biggest thing is always the team. It's a great CEO, founder with great team around them as well, who can build, drive, and grow a credible, strong business. That's what it comes down to. It is the biggest factor by a significant margin. We did a lot of research on investors and their returns, and when they've had successful outcomes, the vast majority of those successful outcomes were actually pinned down to it being a very good team. And that's what it comes down to. That is the big thing. A terrible team couldn't sell the best product in the world. A great team could probably sell the worst product in the world. But another thing they're looking for is scalability, really strong, clear signs of a really good value proposition as well is always really important to look for too. I think that's crucial. And also investors are always looking for some level of traction and some amount of how much this is proven. It's theoretical, but actually what sort of potential customers, partners out there are actually substantiating your claims that this is the next best thing since sliced bread. So they want to see a bit of traction, a bit of commercial engagement too. But team is always number one.
Just one more for you on investment, and Peter just presses you a little bit on this, because he's saying there's a lot of talk around investment in purposeful ventures. It says, is this a genuine trend, or are our mainstream VCs and angels, or are they paying lip service to purpose, and are they really only interested in financial return?
What do you mean by purposeful? Do you mean like it can impact socially responsible things?
I think that's what it means, yeah.
Right, okay, I'm not familiar with the term purposeful investments.
Someone that's a B Corp, for example,
yeah.
would typically consider themselves to be a purpose-driven investor. So not purely financial returns, but financial and societal impact oriented at the same time.
Yeah, I think so. I think we don't come across B Corp so often in the investment world. Our investors playing lip service, they don't have to play lip service, because there are so many amazing opportunities that do bring genuine societal benefits. Green tech, agri-tech, health technology, all brings meaningful change to people's lives and massive improvements. In fact, and there's some very good returns to be made in that process too. So I'm sure there are some who may well do a bit of lip service, but there are some great opportunities to give back and make reasonable returns in that process too. And many investors will see angel investing as generally quite altruistic, because it is very high risk, potentially high return, but also it's a bit of a passion and a bit of an addiction for investors when they get involved in investing. It's not purely as I'm going to make a load of money. It's more about kind of like, I want to have fun, I want to give back, and hopefully make some great returns in the process. So I think they do. I think a lot of them do.
And Jane, does that fit with your experience, the questions you get interrogated on?
Well, all the questions I've had have been, really sensible, insightful questions, I have to say. And, I've never had an investor ask a dumb question. It's always been something that's been well worth asking. And definitely, the opportunities that COVID, I guess, has presented in certain ways, I think that's hugely positive. The ability to work in healthcare, it's a sort of protected industry, and how we interact, that's hugely beneficial. And I think really the future is incredibly bright for UK PLC and also for the investment community. There's some great opportunities out there and some really compelling stories to be had from companies that make this kind of a match made in heaven. So really, I only see rosy things going forward.
And Nigel, what's your perspective on what investors are looking for?
So I think going back to that question around purpose, I think many investors today are much more explicit around their investment criteria. So whether that be a really well-known angel like Peter Cowley, former UK Business Angels Association Angel of the Year, he's absolutely upfront about what his investment criteria are and what he will consider and what opportunities he's not right for him. Then you get a lot of many VC firms that are setting up at the moment. So take Ada Ventures, for example, a very explicit focus around technology, but particularly around diversity of entrepreneurs of that founding team. So they're explicitly saying what it is that they want to invest in, where they believe that their investment thesis yields them both the financial and the non-financial returns that they're looking for. So in a way that makes it easier today, I hope, for businesses that are looking to get investment to be able to understand when it's right to contact an investor and really go hard on a pitch versus the old days when it used to be the VCs in particular 10, 15 years ago simply used to say, we're a generalist investor, we'll look at anything, and then would turn down most of it because actually it wasn't what they were looking for, but they weren't particularly explicit. I think today's environment, investors are much more explicit around their investment criteria, and that means that for a well-prepared business, Jane, I'm sure you know which investors to contact because it won't waste their time, it won't waste your time, it's likely to yield a better chance of getting to a meaningful conversation. At least I hope that that's how it's working well today.
Yeah, and some of the family offices as well, especially if you're looking for seed money, they're absolutely brilliant because they'll often have a sort of philanthropic kind of bent to their investments and their portfolio, and they're wanting to do some good in society. So if you happen to hit that mark, then they're really great to kind of reach out to and get some feedback on your pitch.
I've definitely seen that there's been more investors have been really open, especially in the last couple of months, as to how they're responding as well, and that kind of honesty has been warmly welcomed by founders trying to raise. So I want to pick up on one of the other pre-submitted questions we had on about what innovation support there might be for robotics and remote working technologies, kind of post-COVID in this new way of working. I don't know if, Nigel, that's something you can comment on.
So now we're getting into the ones I haven't prepared to answer very well.
Sorry.
So areas like that will be covered through Innovate UK's grant funding programs, because artificial intelligence and the data economy is one of the core elements of the Industrial Strategy Challenge Fund. So there are specific programs looking at so next generation services, for example, how augmented intelligence is going to impact on the professional services. There are then programs that we have that are responsive. So SMART is the best known of those. Any sectoral focus is available, and I read a tweet today from Innovate UK that there'll be more information coming up next week about the next round of SMART funding and when that's going to be available. It has been paused because of our COVID response work, so that can fit in there. But I think more generally, when it comes to what's the value proposition, what's the customer need, who is the customer, what do they wish to purchase, and then it becomes a question, sort of the other side of the value proposition of how are you then going to deliver that. I think what this lockdown period has demonstrated to us is that a good business will have the opportunity, will understand how to engage with customers, whether it's remotely, whether there are more opportunities in a more lockdown world than there were in the old world, and therefore it's up to people to demonstrate that. There's also more of a risk involved. One of the slides that I'm sure most investors hate seeing, and certainly I, as I'm part of the credit committee of Innovate UK Loans Limited, get slightly allergic to, is that chart in many an investment pitch, which has the proposition and then 3 competitors and a tick in every single category for your proposition and a big red cross for all the competitors, which shows that it's the only answer. And the 2 competitors that are, one competitor that was always forgotten in the past was people don't do anything. It's just inertia. There's not any change. That's rarely addressed. And I think today there's that added challenge, that added competitive threat of, well, the world's slightly different. How can we deliver from a home environment? How can we deliver to customers who aren't coming in the same way, who aren't engaging in the same way? And therefore that risk management and the opportunity need to be put together so that that proposition comes forward.
I'm glad you mentioned SMART, Nigel, and what the timeframes are on an announcement, because I was inundated with questions on that in the lead up to this. So thank you for answering my question before I asked it. One of the other funding schemes that has been also raised in the chat is around KTPs, the Knowledge Transfer Partnership Programme. A very long established funding programme that's had huge success in enabling collaborative R&D projects with universities and companies. I don't know, Jane, if you've accessed them before.
Haven't, but I do know about them, and I know that they've been hugely valuable in the past. And we have, in a previous position that I was in, we've accessed collaborative work with academics, and it's been hugely valuable to us. We learned a lot from those sort of collaborative relationships. So KTPs, I can't praise them highly enough either, because they're extremely valuable to companies. You get a lot out of the collaboration. It's for short periods, as I understand it, isn't it, Charlotte?
1 to 2 years. Yeah. 1 to 2 year projects.
Typically.
Yeah. I don't know what the funding arrangements is then. If Nigel, you know anything about potentially that, I can assume that they are continuing to continue.
As far as I know, I've certainly not heard anything that would suggest otherwise. It's a core element of what Innovate UK does, that relationship between a business, a university, and the associate who brings the knowledge from the university, helps to embed it in the business. That's really important. One thing I've heard some investors say recently is that there's a risk for early stage businesses in today's environment that that getting talent is going to be a bit harder, because fewer top talent people are going to want to work as freelancers, or perhaps they might see early stage becoming one of the first employees in an early stage business is relatively riskier than it used to be, and that therefore some of the talent might migrate to the large corporates. KTP can be a way around that, because the associate has that talent, can work in an early stage business, but they as an individual would have the security of being employed by a university on a contract, and therefore that balance of risk and reward and enjoyment and contribution may be shifted. So I would hope that a KTP program will continue to be really beneficial to businesses, a great way for early career researchers, typically postdocs, be able to contribute something very significant to really interesting businesses who are doing cool things. And very, very, very often that results in a longer term employment opportunity.
Great, thank you, Nigel. Alan, I just want to double check, are there any particular themes you've seen that have come through on the chat just before I wrap up?
I think, well, a lot of questions about a lot of interest in Innovate UK funding, but I think we've covered a lot of that. Yeah, so I don't think I've got nothing else for the time being.
Great, thanks, Alan. And thank you so much to our panel for sharing your views of the current investment landscape, but perhaps what we might see in the near future. I really like the fact that we might have some kind of blend between online and face-to-face in the future, and that we might be able to support the levelling up agenda as well as the green recovery. So this webcast is actually part of our Beyond COVID-19 series that KTN is hosting on various sectors where there has been a fundamental change, and we're considering what the future might look like and how innovation has a part to play in that. So next up in our series is what role innovation has to play in ensuring a green recovery. So it actually builds on what we've been discussing, which is great, and that will be chaired by KTN CEO Dr. Alicia Greeted, with a panel Melanie Bryce from Scottish and Southern Electricity Networks, Christine Boyle, MBE from Synergy, and Peter Good from South East Energy Hub. So thank you very much to your panel and to our attendees for joining us today, and take care and goodbye.